The era of global integration is being tested. With US tariffs shaking the foundations of Asia's supply chains, can the region build resilience? After the tariff announcement this year, stock markets across Asia plunged. At one point, China's Shanghai Composite fell by over 8%. Hong Kong's Hang Seng dropped more than 13%, and Japan's Nikkei closed nearly 8% lower. Analysts called it a bloodbath. India's pharma stocks fell by 2% in late September after US President Trump announced a 100% tariff on drugs and medicines. Although countries like Indonesia, Japan, Vietnam, and South Korea have entered into trade deals with the US, major economies like China and India are still in negotiations. The impact on Asian countries varies based on how significant exports to the US are to their GDP. Experts believe that India may absorb the US tariff shock over time, while more export-centric economies such as Cambodia and Vietnam will struggle more. The impact on the workforce has already begun to show, but for now, it's up to each Asian country to build internal resilience. A senior global economist at JP Morgan questioned the validity of such trade deals. If the International Emergency Economic Powers Act is deemed inadmissible, the legal status of the trade deals themselves could come into question. Historically, the International Emergency Economic Powers Act has been used for targeted economic sanctions against specific foreign threats, not as a tool for broad tariff policy. Asia needs to stand on its own and move towards strategic decoupling. US tariffs challenge the very foundation of globally integrated supply chains that Asian economies have relied upon for decades. Forward-thinking executives must now build regionalized value creation ecosystems with fully localized research, production, and distribution capabilities in each major economic bloc. Do US trade tariffs present an opportunity for Asia to emerge stronger? Read our story to learn more.